Saving more has consistently been a top financial resolution for the new year, but some Americans may be trying to reach that goal a little differently in 2021. CNBC senior personal finance correspondent Sharon Epperson takes a look at how workers are trying to figure out the best ways to maximize their retirement savings.
31-year-old Angel Trin works in cybersecurity. Her main focus this year, her own economic security.
My top goals for 2021 is to actually be better about investing.
She's saving as much as she can in her retirement accounts now so that she's well prepared later.
I have to play catch up now. After I paid off all my student loan debt, I can now max out my investments.
The maximum you can contribute to an IRA this year is $6,000. You can put away up to $19,500 in your 401k. If you're 50 or older, you can add catch-up contributions to both. An additional $1,000 for an IRA and an extra $6,500 in a 401k. Trin's retirement savings are mostly in target date funds, which automatically rebalance from stocks to bonds as you get closer to your retirement date. This year, she wants to start investing on her own.
It's definitely one of my resolutions. Of course, investing is risky, but at the same time, like the bigger the risk, the bigger the return.
Financial advisor Roger Ma, author of Work Your Money, Not Your Life, says focus on what you can control in the investment landscape.
What you're invested in, how much you pay to invest, and where you put each of those investments, what type of accounts you use.
Then build on what you already own. Advice Trin hopes will help her with her ultimate goal.
I want to retire with a lot of money and be financially free.
Roger Ma says one way to be more independent investor is to try to build your own target date fund. Use the components that comprise most target date funds, and that would be a U.S. stock index fund, an international stock index fund, and a U.S. bond fund. And in this way, you can start investing on your own and still make sure you have a diversified portfolio for your retirement account, Becky.
Yeah, and be paying lower fees at the same time, too. Sharon, there was a lot of trading activity in 401k accounts last year. Yeah, all that trading activity that took place, what kind of long-term impact might that have on those retirement savings?
Well, Alight Solutions takes a look at 401k trading activity, and they look at about 2 million people's accounts. And what they found in 2020 was that it was the highest level of trading activity in 401k accounts that they'd seen since 2008. And a lot of folks were moving their money from equities into fixed income at the wrong times, though. As the market was going up, they're reacting after they're seeing a market move, and they're not really taking advantage of what they should be doing, which financial advisors say all the time. If you're going to move money within your retirement account, you want to do it because your financial goals have changed, your time horizon has changed, or your appetite for risk is different than it has been. But you should not be making changes within your 401k just based on market action. This is your long-term savings for your future.
That's right. That's right. Really good advice. Sharon, thank you. Great to see you.
Sure. Good to see you, too.